So welcome to the members only webinar for Friday, October 6th. And as usual, we'll kick it off with a little bit of broad market analysis and a little bit of market profile, and then we'll get deeper into the trade ideas for next week and what Scott and I are looking at in terms of how we're going to be playing this market next week, and even go into some details on the spreads that we're going to be possibly using to get in that. If you're watching this as a premium member, then you'll receive real-time texts on any trades that we will take. You'll also receive, of course, the nightly update, which is the rundown of any texts and trades that have been sent, along with my Scott's as well. You know, our personal thoughts on why those transactions were affected, and then also my personal thoughts on the market. Then, of course, you always can join the private webinar at the end of the week, which is really cool. So if anybody's watching this who's not signed up, it's at shadowtrader.net. Click on premium services and you can join either of the two advisories there. So, all right. Some of you may have heard the comments that I'm about to make because today is kind of a weird day in that I happen to be on the on the Squawk Box for Brad. So you may have, some of it for some of you may be somewhat repetitive, and I apologize, but I have to assume that, there's a broader audience here that didn't hear my comments. And so my main takeaway, at least from today's action, is that the market is overbought in the near term, but it continues to act as if it was oversold in the very, very short term. So I should say it's like more overbought in the longer term, but in the very, very close time frames, it's really oversold. And the reason I say that is because today was a classic example where we had an 8:30 a.m. liquidation break on non-farm payrolls. And it doesn't matter what they were, it doesn't matter. But regardless, the market is obviously construing whatever came out in that it is it is increasing the odds, I should say, of a December rate hike, basically, right? But the point is that the break was fast and swift, not very large, and it lasted just a short while. And after that, the market was not able to definitively close any bars really below the low of that 8:30 action, and we constantly just kind of hung out below there. So where does that do? That leaves us in, like I said, so is there room for further pullback? Certainly, but as of today, if we're just taking the market day by day, it's just not happening yet. And remember that sideways is 100%. Sideways is a bias in that we could easily just get this sort of action where you can see that the market has, moved sideways, gone up, moved sideways, gone up, moved sideways, and gone up, right? So just keep that in mind. All right, so that's the situation on the ES. If we look at broad market activity, there's just one thing I wanted to mention that I think is important, and that is if we look at the SPX and we switch out to a weekly, you can see here that the main trend channel has been breached to the upside, and you see it clearly on the monthly chart, right? On the monthly chart, we're still one time framing. We're now in the 11th month, I believe, of one time framing. So that is important. This is where one time framing started. This actually went below, so it's actually here. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we are in the 11th month of one time framing. But remember, this could always just resolve itself like this, where we go sideways, or there could be a larger move down that takes a little bit of time to start, or it could be this. It's really hard to say. I have not had the best of luck, I'll be honest with you, with shorting, and I haven't done any shorting in this market. I'm talking more just in general terms, in technical terms, in shorting the backsides of trend channels. Like usually the normal technical analysis sort of theories will tell you that that's where the market is overbought. Certainly you don't want to be initiating new longs on it at that level on a stock or index or whatever is at that level. But generally the shorts tend to do nothing. It'll just go like this and then it'll chop, frustrate you, and then maybe the leg down will come much lower, or maybe the leg down will come after a lower high or double top. That's also a scenario that we have to look out for, is that if the market goes sideways here, right? Very, very important. If the market goes sideways here and then rallies again, look for the possibility of a lower high. If there is possibility of a lower high and the market starts selling, sellers will come in and they'll bring it lower. But again, all this is really just conjecture at this point. It's a lot of speculation, not really seeing it. Obviously none of that is played out yet. All right. Let's talk about market profile a little bit. If we could And that means I actually have to switch the screen over here. I apologize. Right, Scott? I have to, because this webinar jam thing is interesting. The way that it, there we go. Switch the screen over there. Alrighty, and
You're up and rolling.
bring that up. There we go. Got it, right? All right, I think I've mastered this. It's very interesting. Webinar Jam knows what screen you want to watch. Even if you move that screen, it still watches that, but I've got to move it over here for Camtasia. All right, anyway, so what's the takeaway from today? So here's some of the things that we want to be kind of looking at. Is we've got poor high up here in yesterday's high, which was poor, right? And we've got poor high today and poor low today. And this is a 45-degree line angle. And 45-degree line angle, and that's this action here, where I'm moving the mouse here, 45-degree line angle. 45-degree line angle implies that the market is kind of oversold. So this is really what should drive home the specifics of what I was talking about in terms of a market that is overbought in one time frame and oversold in a smaller time frame. So just be aware of that. And what is the overall takeaway, for lack of a better word, from this is basically there's nobody that wants to sell this market. There are no sellers here. Like the only sellers that are here are like the shortest term sellers that are like people who started trading like 2 weeks ago, and they're like, ooh, if the non-farm payrolls comes out, whatever, I'm gonna hit the short button. You know, whatever. I'm just throwing an example. Like people who have no idea what they're doing, and they're like the smallest time frame. Like I just don't see anybody with a longer time frame committing to anything bigger, because remember, that commitment brings along with it stair-stepping lower prices, where those types of individuals do what? Sit up on the offer, wait for the market to rise in the offer, sell, 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 hammer the market back down, sit on the offer again somewhere lower, market makes a lower high into that area, hammer it back down. That's how they operate. They operate on the bid and on the offer, not at market, and they don't operate in an emotional manner. They operate in a very slow, calm, methodical manner. So that's something to keep in mind, all right? So that's what I'm seeing profile-wise. Possible negatives could be, right? Here is point of control 1, which is virgin, right? Virgin point of control means untested. Virgin point of control 2, or rather, no, I apologize. This is just 1. This one's cleared up. Here's 2. Down here on 10-2, and here's 3. So 3 VPOCs below, where we've just rally without coming in to test any of these high volume or long, time areas where the market spent a good amount of time. So that's just something to keep in mind, basically. Just know that these areas are out there. Again, do they need to be tested? It should be, in order for the rally to be on firmer footing. But does that mean automatically that it's bearish out there and that it's going to get tested? I would say no. It's the same thing like by looking at today's low, which is a poor low, right? They can mean one of two things, and they kind of come one after another. Is the low poor and needs repair? Yes, but it also means that the people got themselves too short there, and they weren't able to take the market lower and have an excess high, and that's what created it, right? Notice that here there's no taper, and it's obvious because obviously there's nothing skinny here, but as it stays fat all in here, look at the contracts. 28,000, I'll make this bigger, right? 28,000, 25,000, 21, 38. You see what I'm saying? So that's strong commitment in terms of volume to price levels there, but strong commitment without getting any payoff. And that's what causes that poor low, causes that 45-degree line like this moving up, correct? And then causes people to get overly short. And this is the scenario. Probably not in this particular weekend because the market is so high, but just so you understand very, very clearly, because this is such an important concept to know, this is the exact scenario that causes the market to gap up on Sunday nights. This is it, simple as that. Now again, I'm not 100% sure of that in this market, because this market is really just had one day of pause and balance in the context of so many up days and so overextended to the upside. But just be aware, this is news you can use. When you see the profile developing like this, You see the 45-degree angle going up from the bottom, and you see that the lowest pour, that's the recipe for a gap up. That's essentially what makes the market gap up. You will have the market gap up, and if you're not astute about these things and you don't know about it, you'll be looking for reasons for the gap up, and you'll be scouring the news or whatever. Let's say you're short and you don't understand why the market gapped up. But trust me when I say this, you're wasting your time, because this is the reason why the market gaps up, all this sort of inventory repositioning and whatnot. All right. Let's get into the more premium section of the webinar. Let's continue on with just the members only stuff. I want to talk about my trade ideas for next week, and where I see things headed, and what my favorite stuff is for next week.